member that does not have dependents dies shortly after retirement. Our response is that the bill, the PFA bill, even the Revenue Laws Amendment Bill, they do not make changes to how funds handle death benefits. Concern is raised that the de minimis amount, which is currently 165,000, this is an amount applicable for purchasing an annuity. So any amount above, if a member retires and the retirement component has accumulated amounts that exceed 165, a member cannot cash out. The retirement component will have to be paid as an annuity. The concern is that this amount is too low. There's a request that it should be increased. We do note this concern. However, this amount has recently been increased. It's a general policy concern. It's not specific to the two-part system. We are willing to take up this discussion at a later stage. We also received a request for clarity on the treatment and allocation of the purchase of service periods in terms of the two-part system for defined benefit funds. So defined benefit funds, they use a formula to define the benefit that pays out. And a member has the ability to purchase a service period, where in the case of a defined contribution, a member can just make additional voluntary contributions. So in the case of the defined benefit funds, our response is that where the service purchased is comparable to an additional or should be comparable to an additional contribution in a defined contribution, it should be allocated proportionally in the two component, savings and retirement component. So if a member that is in a defined contributions makes additional voluntary contributions, those contributions will be split in terms of the savings and the retirement component. Similarly, if a member of a defined benefit fund purchases additional service period, that service period should be split in terms of the savings and the retirement component. However, this additional contribution is subject to the allowable tax deduction rates. Currently, the deductions into funds have the rate of the lesser of 27.5% or 350,000. So a member can contribute up to those limits to get the tax deduction. The concern was raised on the practicality of the implementation date of September 2024. We do note the concern. However, the date is set for September 2024 and has been adopted by Parliament with the RLEP now en route to being assented by the President. Thank you, Chair. I think that's the end of our responses.
Now, the letter from the Ministry is basically dealing, obviously, with all these amendments, right? In the printing, mistakes made in the printing of the bill on the day it was voted on in the House, right? In the NA side, am I correct? And
yes,
those
yes.
overlap with what Asisa has said.
Yes, correct.
Right, so we have to make those amendments. And you have a separate annexure document, is that right?
Yes,
where
Chair.
Yeah, okay.
Yes. Would you like the legal colleagues to speak to that? This MP
Well, not now, but when we process the bill, yeah. But if I understand you correctly, and the submissions made by the two stakeholders, there are no proposals for change of content.
No,
so
Chair.
it is only these technical amendments.
Yes, correct.
Right. Now, can I hand back to the stakeholders to come in, and then we throw it open as we do in the usual public hearing process to all the members. So COSATU first, and thereafter Asisa.
Okay.
Do you have anything to say? Yeah.
Sure. Be quick, Chair. Thanks. No, look, Chairman, I think you're right. We have consensus with Treasury. I think we're simply keen to see things get done. We don't have any substantial amendments. We've had a long discussion, long journey. So I think we've agreed to the compromises. Just, Chair, in terms of the technical drafting, cleaning up, wherever there's typos, etc. We would support fixing those now if that's possible and that's necessary. And I think if one recalls correct, without being too presumptuous, I think one recalls the input by the legal advisor, Frank Jenkins, and I think also discussions with both committees that is possible during this remaining month and a bit of this parliament. So I think, yeah, Chair, in a nutshell, we're keen. We will support any necessary technical amendments, and I think we're just keen to conclude, and we think we can do so. Thanks.
Yeah, I think we must pass these amendments because it reflects badly on the National Council of Provinces if we let it go. So there's no debate about that. The NA will have to deal with its own issues. The only issue is whether this requires the NA committee to formally meet and so on. But that Frank will come in on. Asisa?
Thank you, Chair. We accept Treasury's responses, and we'll be very happy if the technical amendments can be made and if it won't hold up the process to pass the bill as soon as possible. Thank you.
No, they can be made. NA is sitting for two occasions at least, one in April and one in May. And, we must just do what we have to do. It's not going to hold the process up. Okay, fine. Let's go to members now. Whose hands are up? Dennis, anybody else? Nope, okay.
Thank you very much. Morning, Chair. Morning, ladies and gentlemen. Before I start, Chair, condolences on the loss of your comrade, and thank you for being with the arrangements for today's meeting. So, yeah, thank you to, again, Father Matthew from COSATU and to Ms. Messerschmidt for compelling inputs. And, yeah, I think COSATU's inputs are mostly, I think, stuff that we've come a long way discussing, and we're largely in agreement with the principles. There's a couple of important things that came out of Asisa, and so I'd like to maybe dwell a little bit on those. And first of all, I note that obviously from COSATU's side, they're quite keen to get this thing to move forward, because the members are hoping to get their hands on a little bit of money, additional money. Some need it, or some think they need it more than they do, but other people may well be in desperate need, and it's for that very reason that we've taken this route. Obviously, the complexity comes in with finding a balance between the dates, and I mean, it was raised in the document that Asisa put forward, and in Treasury's response about the implementation date. But Chair, I want to make quite a strong point here. I've noted that one of Asisa's members is Old Mutual. Now, the Old Mutual have been in the media vocally expressing themselves on this matter, and it's very disappointing to me that no one's taken time to bring their concerns to this committee and explain it in detail, noting that none of us are pension fund whiz kids. We are politicians. We are jacks of all trade, master of none, and we have broad overviews. So no one's taking the time to include the decision makers in the debate. It seems to be, Old Mutual and a few other big players taking snapshots from the sidelines, but not actually engaging with Parliament. Now, the erosion of Parliament is on many people's lips, and the fact that Parliament is a shadow of what it used to be, etc., etc. But if you're not prepared to engage Parliament, then what do you expect? Is my response to that. So I've got to tell you, Chair, I'm a little bit grumpy at the fact that the the level of inputs that we've had has been, fine, but it's been quite on a fairly superficial level without going into depth. So, to Mr. Williamson and his cohort, if you really want to, make a lot of noise, come and make it where it's going to make a difference, because, talking to the media is not going to have an impact on the implementation date. Treasury was quite emphatic in their response. And I mean, what they're saying to you, and it's written in bureaucratic speech, it says, Parliament has decided this will be the implementation date. So what they're saying is, this is a political decision that's been taken. So if you want to influence that political decision, don't talk to Treasury, come and talk to the politicians. That's what Treasury is telling you. This was your chance. And I did try and send a kind of a prompt to Old Mutual, because they're the ones that have been most vocal in the media, but we haven't seen much about it. Again, people trying to access the administration through their back channeling that they've been so comfortable with over the years, and not actually engaging Parliament where the decisions are supposed to be made. I would love to find a compromise that's going to work, because the worst thing we need to do is to create a false impression for members of pension funds that they're going to have the ability to access things in September, and then it all falls on its nose when the date comes, and we find ourselves in a position. So, Asisa, I don't believe that you've done justice to the argument, explaining why the implementation date is so impractical. And I certainly think that your members could have gone much further in terms of sending some people here to explain what the real technical issues are. So yeah, that's the point. In your presentation today, though, you did mention that there are a lot of FSCA processes that need to take place, and each pension fund is going to need to get an approval from the FSCA. I'd just like to hear from you, Asisa, if you've had engagements with the FSCA, if they've been proactive, or what the situation is in terms of guiding people through the processes and the timelines on that. Have they indicated that they will be able to process what promises to be quite a voluminous pile of paperwork that they will need to go through? I'm sure a lot of it will be fairly standard, but knowing the industry as I do, each one will have their own set of legal guys drafting different wordings, etc., etc. So I do think it's going to be a bit of a process. Let us know if you have opinions on that. Let us know now, please. Yeah, I'm a little bit worried about the emissions numbering errors and consistency issues. I note the minister's letter. Thank you. Obviously, these things should be avoided, especially when we're trying to process bills fairly quickly. So yeah, not hugely impressed by that. And the fact is, yes, it is going to have to go back to the NA at some stage. I then want to talk about the deductions for housing loans. This is quite an interesting thing, and I mean, the comment by Treasury is well accepted that the loans against funds by employers versus loans against the pension funds by the fund managers themselves, are two very different things, and I get that entirely. And the NCR implications were raised. Now, Treasury, I don't think it's up to you to determine whether an entity should be able to apply for an NCR license or not. But I'm just wondering, is this a material change in how things have happened before? So have employers been allowed to do this before? And are we going to effectively be changing the conditions of employment for certain people by making this amendment in the law, or by having this raised in the law? And I must talk for myself and say, many employers don't always have the interests of their employees at heart. So loans against pension funds should probably be avoided as far as possible. And if one sees what the property market, certainly in Gauteng, is doing these days, I think that there's no such thing as a sure investment anymore. That's for certain. So that is my concern. But the concern is made worse by a comment a little bit later in Treasury's presentation, where they said not all pension funds offer such a facility. So it is going to, in my view, change the way that certain employment contracts are envisioned. People that may have had an incentive built into their contract before will no longer have that. Perhaps Matthew can guide us a little bit about that. And then just an observation in terms of that 165,000, and there were a few other specific amounts stated in the Act. If Treasury can just tell me, are these things that are included in the annual review of the Rates and Monetary Amounts Amendments Act? And if not, should they be? Thank you very much, Chair.
Thank you. Any other members want to add anything? Tikeledi, please.
Thank you, Chairperson, and good morning. Good morning to all the members and the stakeholders, the colleagues on the platform, and condolences. Chair, I think my concern is on what Honorable Ryder has raised, the issue of Old Mutual. And I don't know if Old Mutual is a member of ASISA. And I thought this bill that we're dealing with will help most of the people in our constituencies, but also ourselves. There are many concerns that has been raised, and we are being blamed from our constituencies that we seem quiet, we are not doing anything because they can't just exist. They might have been legislated. So one needs an assistant and a guidance from ASISA and other members who might have information in as far as how does this relate to ASISA or any other, or is there any other organization that can assist? The other concern that I had is that when one passes on soon after the pension has been put in the pot of or investment of Old Mutual, the remainder, no matter how much it is lost. Your beneficiaries cannot access that, and this is what exactly what has been experienced by the people who are complaining about it on the social media. And for one, I'm also affected. I don't know if this is correct and what is that I'm going to do about it. Why are people not allowed? If I want to take that money for myself, why can't I be allowed to do that? But it's a very serious problem that affects most of the people, Chairperson. I think we need to be assisted, even in our community, even if we are not members of Parliament anymore, come 7th administration. We must be able to, to give people guidance and which door to knock, what to happen. And lastly, Chair, I would like to know if these consultants that are being used for pension to assist, or tax consultants who are assisting, pension beneficiaries, are they members of ASISA, or where do they fall in? Because I've got this view which is subject to correction, and this is what also because of members of the society have been raising, and my constituency, that it looks like these insurance companies that we put monies on, they seem to have a relationship with this consultant, and this consultant are getting something out of them. whereas you as a member, you don't benefit much, and they decide for them how much they will get on a monthly basis. So those are my concerns, Chairperson, just for the benefit of the constituency. Thank you.
Thank you, Dikuledi. Right, so I don't have much to say. Treasury will reply to whoever else, Asisa and Kosato might want to say something. Is there like an implementation plan between, say now, let's say 1st of May to 1st of September, that's consensually agreed between industry, National Treasury, and other stakeholders, not least COSATU and other representatives of workers? Secondly, are there things that the stakeholders feel we should put in the report that binds the process to some extent, although the report doesn't have the same meaning, obviously, as a provision in a law? Thirdly, on the matter of typographical glitches, I know Treasury, you're under pressure, and I know Parliament's under pressure, but this is happening increasingly over the last few years, and it's just not acceptable. The primary responsibility resides with the executive, I think, but also Parliament's oversight staff are meant to check these things. I'm not sure who's supposed to do what, but it is extremely worrying. And I don't think that we should let it pass, so we must effect the changes. Now, can you come in here, Frank? Is Frank here? Frank?
Chairperson, I'm here.
Yeah, the question to you is these technical glitches and cross-referencings, do they have to go back to the NA SCOF, or are, because they just simply like these sort of minor technical things, no change of content, they don't have to go back for the committee on that side to consider and take back to the House?
Chair, my view is those typographical changes, and that's not just my view, that is the practice, the typographical changes, the new combined words that we see in that text, and the full stop, semicolons that's been omitted, even that one paragraph that needs to move to the left to make it. Those are typographical. We don't need to. We can effect those administratively. We don't need to put that on a proposed change. The others are more substantial. Those need to be a proposed change that will go back to the NA for a C list. So we can affect the other changes typographically, and if it will save time, then of course I think National Treasury must advise. But those other substantive changes can then be done later. But if it can be done now and the houses will meet, then it can be done now. But what can be done administratively, we can do, Chair. We don't need.
All right.
In fact,
So
committee
can you
conducted
engage?
yeah.
All right. You see, if the process evolves in the way it seems to be doing, the process would have taken this course. I don't know if it's doable. That look, we're about to round up the policy issues. There aren't any outstanding. So we're going to go through the bill clause by clause. Then what I was going to propose, if the meeting agrees, is that on Thursday at 2:00 we meet and process the voting on the bill and the report. But, I don't think we should leave anything till later. There's going to be a new committee on both sides, and whoever wins, obviously. But, and we know who's going to win, but that's not the issue. The members are different. The chairs might be different. The whips might be different. And on this side, the chair will certainly be different. So what I'm saying is, no, I don't think so. I think unless it's insuperable, we just do it. The National Assembly is meeting soon. In Kululeko, can you check out the date and let me know after this meeting what date they're sitting again? It will take one small sitting for them to sort these issues out. But it reflects badly on the NCOP committee, really, if we let it pass. Also, there's a clumsiness that both National Treasury and Parliament must account for. or the National Assembly must account for. So I don't think we should let it pass unless it's impossible and it's going to hold up the process. So is there any disagreement with what I'm saying? Right. So in other words, to summarize, unless it's going to hold back the process and nothing can be done by the 1st of September, we go ahead and make the changes, and the NA process must take its particular course. Okay, having said that, can we go on? Well, it's me speaking, so can I go on? Okay. On the matter of, I think in our report, Esther and the team, you should put down that, reiterate our concern about the tax issues and the need for education of workers from all sides, not least the COSATU and representatives of workers. And if ASISA has a role, I'm sure it does. But I also think if you listen to Dikeledi now and so on, there's a lot of misunderstanding across the board. So there has to be a lot of publicity, Chris, and your team. You know, I don't know how you do it. These days, it's all kinds of social media and adverts and so on. But about this process, otherwise it's going to be very messy. But most of all, is there an evolving or already shaped, maybe that's asking too much, program? Or is there going to be a program to ensure that the different elements are implemented sequentially and whatever, so that by the 1st of September, this thing goes into effect? Right? Can I have responses, please, from Treasury and then the stakeholders?
Thank you, Chair. Maybe I'll start first, and then Alvina can come in after me. Quite a few of the questions were directed at ASISA. They can take those. On the monetary threshold for annuities, 165,000, we do look at that periodically. It's not changed every year. There are quite a few of our rates and thresholds are adjusted every few years for inflation. So we said that we will have another look at that one. There is an interesting point about this annuities that Honorable Mhlangu mentioned about if a relative passes away, but then their beneficiaries don't receive anything, and it's the type of annuity that they have purchased. So if they purchase a life annuity, that means it's pooling the risk of when someone passes away. So it will pay you until you pass away. So if someone lives a very long time, they'll get a lot of payments, but if someone doesn't live as long, they won't get as many, and it pools that risk. But then unfortunately, the beneficiaries after a number of years don't get anything, any of the remaining amounts, because there isn't a remaining amount. The insurer will just continue to pay you until you pass away. There is another type of product called a living annuity, and that one is different. So that one, there is an amount, and individuals can take 2.5% to 17.5% out every year. And anything that is remaining when they pass away is passed on to their beneficiaries. So we have written some previous discussion papers on that. But I think it is part of this education campaign that we do also need to look at those issues and look at products, because if it does create a lot of anger, we need to see what we can do to either educate members so that they purchase the correct types of annuities, or they understand the implications of the different products that they purchase. Is there an implementation plan? We have met with FSCA previously. I think Zareen is here, so she can also talk to this about whether they would be ready. We have met with SARS. SARS have been working, and they are working on particular processes to do with industry, so that as soon as the implementation date comes around, they are all ready to process those applications as soon as they happen. So there has been a process. Each organization is, working towards getting this implementation date ready. As NT, we provide some oversight. So we've spoken to some of the different administrators to make sure that they will be ready, and they have said that they will. Maybe we can go back and check with them all again after this, which is what we would do. We are trying to work on a communication plan within Treasury and the communications unit within Treasury so that we can get more social media out there. We will have more media workshops on this policy so that everybody can be as informed as possible. And we will follow up with them again as well. MP, I don't know if you would like to come in on the legislative changes and administrative changes on the bill. And Alvina, if there's something I've missed, you can come in as well. Thank you, Chair.
Good morning, Chairperson and committee members and stakeholders. I don't think at this point, I think Frank explained, the point is the amendments that are not strictly speaking typographical or not typographical needs to be passed, and I would support that these should be done now and not be delayed, because some of them are quite critical for the implementation or correct implementation of the different provisions. Thank you.
Thank you. Thanks, Chris. Chair, I'll come in on the question raised on employer loans. So currently the Pension Funds Act does not empower employers to provide loans and cede or hypothecate or pledge those against the members' pension benefit. The Act only allows loans or guarantees to members against their pension benefit for housing loans or immovable property. So we would not allow a deduction from a member's pension benefit for a loan that is provided by the employer. Meanwhile, the Act does not allow such a loan to be offered to the member against that member's pension benefit. So I think we are not trying to meddle with the conditions of employment. If there is that arrangement between the employer and the employees, that can go ahead, but such arrangements should not be brought into the Pension Funds Act if the Pension Funds Act does not empower or allow such provisions. So Chris, you have covered the implementation. We do have regular meetings with Revenue Services and the FSCA to map out the implementation plan or any issues that need to be addressed towards implementing the two-part system. You've mentioned the information sessions we will have starting with government employees. We also have a media workshop with the media to ensure that they disseminate the correct information. FSCA is also planning information sessions with funds. Thanks. I think that's all. Thank you.
Sorry, that thing's not easily right. Members, do you want to come back? Before, I forgot to say this. The other thing, Esther, you might want to put in is reiterate what we said about big business blabbering away in the media and they're not appearing before Parliament. Now, we can't entirely blame anybody. There are sections of civil society who feel the same way about us because we are seen, excuse me, we are seen in a particular way as not fulfilling our constitutional obligations and so on. So we can't just blame outside stakeholders. I don't want to enter into exchange with you, Dennis, but you know, it's election time and I can't resist saying this. You see, big capital is your constituency and you prime them to come here. It's what I think you might have said. If you didn't, you could have meant that. I don't know. And they don't come. Because, you know, the power doesn't reside with the DA. It resides with the ANC. So, you know, it's a very sad reflection on you in person, Dennis, and your party, that even your own constituency doesn't turn up here. Yet our constituency, so to speak, COSATU, not that there's some appendage of the ANC, they're always here because they know where power is. So, Dennis, we will assist you to get your constituency to come to Parliament, okay? By putting it in that report.
Based on recent history, I think even the Zondo Commission indicates that it's far more in your party's constituency, that big business.
Excuse me.
I'm not saying this entity specifically, but generally as a rule.
You're out of order, Frank. Can I expel this fellow from the meeting? Frank, don't answer. I know the answer. I can't expel you. By the way, I did actually ask one of your colleagues to leave. I've never done that in my life. And Frank said, yes, you can. And I think he walked out, didn't he? Yeah, it was an afternoon meeting. And I have no regrets about that. But anyway, and I think we know who I'm talking about, Dennis. Right. So let's come back to the point, which is that it is correct, really. I think, Esther, we should just reiterate that. But we're not going to rehash the previous report. I'm just saying those elements should go in. And we should say that we are quite concerned. I would like to use the word appalled. It's not a reflection on you, MP, or Frank, or anybody. You're excellent individuals. You're under huge pressure. But it's about the institution, and it's very worrying. But it also reinforces the thing when we rush to do bills. Although the truth is, I've seen that even bills that are not rushed are experiencing this more and more. It was unheard of in the first 10 years of Parliament. It started happening, I think, after the first 10 years, I think. But anyway, right. So who wants to come in now?
Chair, can I?
Yeah, who would this be? Yes, Asisa. Yes, please do.
Yes, okay, thank you.
Dicoledi had to leave, right? She had to go to another meeting in the legislature.
Yeah,
So, yeah, you want to say something? Oh, it's still you. Okay, go ahead.
Now, I wanted to.
Dicoledi.
Okay, Chair, I wanted to request Asisa and others to talk to what I have raised. Thank you.
Yeah, good. She's about to do that, I think. Go ahead.
Thank you. Old Mutual is a member of ASISA, so me being here represents Old Mutual, insurers, collective investment schemes, etc., as I pointed out at the beginning of my presentation. Without the context within which Old Mutual expressed their comments where the press was present, I want to say there's a general anxiety among our members to implement a fundamental change to the retirement fund system in South Africa within a very short space of time. And the anxiety is that we don't have final legislation to do that. Every business in its own context, they have different clients, different business models, have implementation plans, and they are working on the faith that the legislation will be passed as soon as possible so that they can make these changes to their systems legally. At this stage, there's no final legislation on which they're working. Our members are working on the legislation as it is known now. They can't afford to wait for it to be final. So there is a general concern about the timing, and I suspect that's where the comments probably came from. But I know for a fact Old Mutual is working very hard at implementation, as is all our other members. In terms of the communication, our members have already started with communication campaigns to the fund members to explain to them what the system is about, what will happen, how it will work. They've also trained their financial advisors in dealing with clients that are fund members or members of retirement annuities so that they understand the implications of the system on the products that they are invested in. We have engaged with the FSCA in terms of their readiness to process the rule amendments as soon as the Pension Funds Act is changed. They have assured us that they will increase their resources to be able to process fund rule amendments before the implementation date. We've also engaged with SARS around the practicality where tax directives will be required. They've already issued their technical documents, which we have commented on and engaged with them so that our systems can integrate, so that that process can run smoothly. On the administrative complexity, there was never a discussion, or there wasn't an opportunity, I think, in this specific committee to highlight the administrative complexities with implementing this system in sufficient detail. We made extensive submissions to the Standing Committee on Finance before the implementation date was changed. And I mean, we accepted that we can work towards 1 September. But just a brief overview, the implementation date is the 1st of September. That's a Sunday, which means that the calculations, the whole of the system needs to be changed so that there can be a creation of the pots, and there are actually 4 pots, not only 2. So that's the pre-March 2021 Provident Fund annuitization, then everything up to 1 September, and then after September, the 2 new pots. So that is a substantial administrative system change. So on the 31st of August, which is a Saturday, there has to be calculations in terms of the seeding capital and the split between the savings component and the retirement component going forward, and how those calculations will be made on an ongoing basis. Then providing access to that savings component. There are administrative processes, the completion of forms, approvals, lots of checks and balances to make sure that there isn't fraud perpetrated through the process. And then those systems have to be switched on the 1st of September, everything carried over. And before that date, even members need to know what will be available to them. So there will be a run up to that period in terms of which members will be informed how much will be available for withdrawal, probably 2 September, but not 1 September, that's a Sunday. And then all of the communications to clients that have been developed, specific rule amendments that have to be prepared, that has to go to the FSCA. So you will, the systems preparations to integrate with SARS. So you'll understand there's quite a lot of administrative processes that need to happen. The complexity around that with the fundamental change is very much business dependent, but it is extremely complex. And our members, I can't emphasize enough that our members are committed to meeting that date and doing everything in their power to make sure that their systems and processes will be ready to do that come the 1st of September. But again, the anxiety is that they're doing all of this based on draft legislation. So the anxiety comes from, we need the final legislation, we need the rule amendments, we need the SARS integration, and the 1st of September is 4 months away, approximately. I hope that I've answered all of the questions. If not, I'll be happy to listen to further ones.
Dikeledi, you're okay? Dikeledi? She here? I think she left. Okay. Are there any other comments, questions, contributions? Any other hands up? Matthew? Father Matthew, as Dennis calls you. You brought this upon yourself, Father.
No, Chair, I'll be happy with the promotion. My father had wanted to be a Jesuit priest. Fortunately, he didn't go that route completely. He dropped out. But so I always have a sympathy for Jesuits, Chair. No, Chair, look, I think just about Ryder's question, employer loans against pension funds, I think we'd be wary of going down that route. But, obviously, I think as Alvina said from Treasury, the law doesn't provide for that currently, under my understanding. It provides for home loans. We'd be keen on that discussion about education loans because, again, home loans like education loans, those are good forms of debt, they're investments, etc. but I think we'd be wary about opening it full force to all loans. We'd be much more keen, obviously, for employers to pay workers better, but that's just a side rhetoric. Chair, I think for us on the 1st of September implementation program, I think in principle there's been good discussions. I think between ourselves, I think some colleagues from Business 2 at NEDLAC, we're having a meeting this afternoon at NEDLAC as well, looking at that specifically. We've had good discussions, informal still, well, not informal, but initial rather, with colleagues from Treasury, with colleagues from the FFCA, some of whom are here online. But I think, we need to tighten up a little bit because, it might seem like a lot of time, but it's not a huge amount of time. And there's a huge amount of work given that we have about 1,600 or so pension funds, etc. And given that many workers are very keen and so forth, collectively, because I think we need to have one message as Treasury, as the pension funds, FFCA, SARDS, Labour, etc. We all have to do our work. We've already begun our work on that front today. And in fact, after this meeting, I'll be going to a shop steward council as well, the Western Cape, just to brief workers. And we've been doing quite a bit of work of briefing workers. I think we've spammed people's inboxes with countless statements on each step of the way. But there's a lot more work that needs to be done, especially on the nitty-gritties. We are also planning, Chair, that as soon as Parliament is concluded, so at least we have that kind of legal certainty under the belt, to go full force, as you were mentioning, around social media. So to do videos and audios, including leaders at different unions, etc., but also covering all 11 official languages and doing electronic pamphlets too, because this really is a topical issue. We want to kind of help assist and so forth. Then, Chair, just in terms of the committee reports, all that we could suggest would be, I think, as you're correctly highlighting, the need for a concrete implementation program. Perhaps even, for the 6th Parliament to kind of get updates, sorry, not the 6th, sorry, the 7th Parliament, to get updates with regards, from stakeholders around the implementation program, because it's not fair that if we, harass Parliament to do its bit and they're doing the bit, then we also have a responsibility as well, given the space for mischief and chaos is significant. I think the other thing we could also recommend, Chair, is that on the issue of retrenchment, that maybe perhaps also that we report to the 7th Parliament on that issue too. We'll not be keen to drag it on too long because it is a significant gap which you can manage for a year or so, but we would not want to see it being dragged out in perpetuity. But again, there is kind of consensus on it happening. I think it's just a question of getting the wording, the modalities sorted out quickly as possible. I think, Chair, yeah, so I think that's it in a nutshell. Sorry, Chair, also your other comment. We have received quite a few reports from some workers who said, look, we're not going to cash out on the 1st of September, but they appreciate having the choice, having the option. And also the law is going to provide quite a few choices to workers to say, you don't have to cash out on 1st of September, or even in 2025, you can allow your savings pots to grow, to accumulate, etc. But when they like the choice that if there is a need, that they, yes, indeed, that option, that choice is there for workers. So yeah, I think, Chair, really our focus now is on implementation, on education as well, because there is a lot of confusion, misperceptions, etc., which we need also to contribute as COSATU to addressing. I think lastly, Chair, to the issue of white monopoly capital and the honourable DA members, we have tried to assist. So we fortunately have members of SASPO, which is the largest banking trade union in the country, and they're also very much keen to helping nudge the pension funds. But that's on a lighter note, Chair. And let me stop there and just thank members for their support on this journey. Thanks, Chair.
Thanks, Matthew. Okay, so a few things that should go into the report based on our exchanges, at least in my view. Let's see what the majority feel when the report comes to us. Basically, I think we've asked both of you, Asisa and yourselves, COSATU, to send us, if you want to, let's make it 2 o'clock tomorrow, a paragraph or so, or half quarter page or so at most, of what you think should be, in aspects of the implementation program that might, if you like, guide the incoming committee on the NCOP side without making too much of this to see whether this is being done. Yes, Matthew, you said, but I wanted to say and forgot and thought about it again when you said that what we should do is maybe also suggest the incoming committee within 1 month of being constituted that excuse me, it invites Treasury and if need be other stakeholders, that's their call, to actually report on progress and to do it regularly until the implementation comes into effect. There is that letter, angry letter, well, not angry, but understandably frustrated, letter from Ms. Snyders. We've covered that as well. Alvina did, right? But that perception, as much as it comes from an individual writing, she didn't ask to appear before the hearings, is more pervasive than we think, maybe. There are others who feel that way. And I've been raising it in some of the chairs. I'm sure Joe gets the same sort of letter or message. But I get it also from via other people who get it from these people or draw my attention to it. But Ms. Snyders has been responded to misunderstandings, but also the insecurities, on the other hand, I think we should understand. Having said that, I can't think of what else there is to say for now. What we need to do is ensure that between Frank and MP, the lawyers, they sort out what is going as a full amendment and what can be done through a technical change. And then we need a report and a bill, at least a report that we take to the NCOP for reference to the NA to send back to the SCOF. Right, having said that, is there anything else people want to say about process? Oh yes, Thursdays we did agree we'll try to avoid meeting. We never said we'll never meet, but this is a very short meeting as I anticipated, 30 minutes or so. The report should go out by 5 o'clock tomorrow, that's Wednesday. So on Thursday we could meet and vote on the bill and the report. So it's 30 minutes, it's a Zoom meeting. There's no flight involved. So we go ahead and have it from 14:00 to 14:30, if that's okay with everybody, but we'll need a quorum. Then there's not much to do except to go through it line by line. So that's what we're going to do now. Now, what I suggest, although I don't know what's the best way, National Treasury, is that instead of taking us to Annexure A separately, we know what it's about. Why don't we, when you're processing the bill, you then draw attention to any clause in Annexure A that you've had to effect by way of amendments for typographical or other reasons, right? Is that okay, or do you want to do Annexure A separately, or how do you want to do it? National Treasury, I'll leave it to you. I don't have any particular view. In the meanwhile, can you flight, excuse me, can you flight the bill on the screen in Koleleko? Right, what do you want to do, National Treasury? I don't have a particular view. Sorry, yes?
Sorry, Chairperson, yes, we can share the, because we've already prepared the bill
Yeah.
with the amendments and then point to
okay. Yeah, okay,
Yes.
you got that. Yeah, fine. Let's do it like that. Okay. So now I got two sets of bill, right? So I think I'm going to use the latter one, right? Because that'll have everything. Right.
Yes, Chair. I'm going to ask my colleague Nomaliso Bolisili
Yeah,
just to
yeah.
point us to.
Yeah, it'll be on the screen, but I'm old-fashioned, so I have to see it on my screen here of the computer, and I hope I got the right one. Right, okay, let's go for it. Put it on the screen, please. Okay.
Good morning, Chair. I've flighted the bill on the
Yeah, I
screen.
see that. Yeah. Okay, go ahead. I'll find the bill, yeah.
Thank you, Chair, and good morning to all the members and colleagues on the platform. As indicated, we have already made the changes in the bill that are the proposed amendments that are also in the pension funds amendment. But I think we just want to point out that in terms of the definitions, there is a new addition that is substantial, which is the insertion of the definition of beneficiary fund. And this definition is being included on request by the industry to amplify the provisions of the maintenance deductions for when a fund receives a maintenance order. And therefore, we were therefore then asked to substitute the definition of pension fund organization, which we did by including a new paragraph D, which will allow the pension fund organizations to receive and process payments in respect of maintenance orders and pay to the relevant beneficiaries. That addition of a new paragraph D in the definition of pension fund organization necessitated, therefore, a reference to the new D in the definition of beneficiary fund. So I think that is one. And that when I come to clause 37 cap D deductions, I will also touch on this. And I think then we then have in general section clause 1, which deals with all the amendments in respect of definitions to assist with the interpretation of the bill. But the most important...
Sorry. You see, you're not going to be able to help us if you have the same screen and you moved on to something else. Members have to see it, okay? And it's become quite complicated because now we have two versions of the bill. And nobody explained to us, well, we weren't clear about how we'll go through the process. So can we do it properly, please? Which means that we have to go through it as if the bill that we currently have before us includes your amendments, right? The latest one, the glitches and the additions that flow from the minister's letter and what you just said, right? But in processing the bill, you just take us through the bill as it is, and then you say, now we've introduced this new definition based on what the industry said, okay? Which is a substantial change, right? So can we start off with going to the first definition there, please, and going down? Do you understand what I'm saying? Yeah, otherwise it's going to get too messy. Members, do you have any other idea on what's a simpler process of going through the bill clause by clause? Anybody? Nope. So we'll settle for that. Let's look at it as it's a bill. Then you'll tell us this is what we brought in since the SCOF process, right? So let's start with that, right? Right. So obviously, right. That's it. Go through it.
The first one then would be the definition of beneficiary fund, which was not in the SCOF version.
That's right. Right.
Which we have included.
Yeah, you explained that and skip that, yes.
And then we have a definition of Divorce Act, which is necessary to the extent that we are...
Yeah, we understand that. Yeah, okay.
And
let me guide you because some of these things are straightforward, right? There's no need to hold us up. That I will intervene. I'm not being rude. It's just to process the matter in a way that doesn't become, let's say, like banal, meaning that we understand what you're trying to say. Right. We go on to D, sub D there. Right.
Okay, so then we have the definition of the various components, and these definitions are already contained in the
good. Next, please.
And they are here. Yeah. And then we have this definition of pension fund organization, where we have already inserted the new paragraph D.
That's right.
And then we have the definition of pension interest, which has been brought to the Pension Funds Amendment Bill. We are aware that this definition exists in the Divorce Act. However, for three particular reasons, we are bringing this definition here. So to include a division of assets of marriages according to the tenets of religion, but also to ensure that the clean break principle applies on the date of court order for the divorce or the division of assets. And lastly, to ensure that the payment of divorce orders is across all three components.
So this will override what's existing in the Divorce Act, am I correct?
Yes, Chair. As you will see, we have a new clause down there that deals with that, overriding the Divorce Act.
Good.
Then we have also the same definitions in respect of the components as contained in the
Yeah.
ADLEP.
Fine. Okay.
And then
Follow.
we then have an amendment of Section 2 in the Pension Funds Act, which provides for in an event of a conflict between.
Yeah, that's right. You covered that. Fine. Next one, sub 3, clause 3.
Yeah, then we have an amendment of Section 14B in clause 3, which deals with the substitution of the definition of OC, as well as an insertion of a new subparagraph to align the formulas that are used in the calculation of benefits.
Sorry,
with
that
the
shift was too fast. Can you go back to that
Dennis?
paragraph?
Yeah, go back. Remember, we've got plenty of time between now and Thursday also. So we're not rushing anything. We're not voting today. We're just going through it informally. Go ahead, Dennis. What's your question?
No,
Dennis,
it was just a little bit quick for me. So
Oh,
I just
all right.
want to go back to this, and then
Yeah.
and obviously now we can carry on. Thank you.
Go ahead, my friend.
Okay, so we have 3 which deals with the substitution in certain Cap B to substitute the definition of OC and also to include a new subparagraph to deal with the requirements of the 2 pots when calculating the benefits. Which then takes us to the next clause, which is clause 4, which is the amendment of Section 19 of the Pension Funds Act, which substitution was to substitute the cap amount percentage rather, which used to be 90 until 100%, which is an amount the fund can provide as a loan or a guarantee. That amount is now reduced to 65%. This is in line with the amendments that were made in January 2023 in the Regulation 28, which reduced this amount. So we took the opportunity then to also reflect that reduction, the percentage of 65% in this bill. Which then takes us to clause 5, which is the amendment to Section 37 Cap A of the Pension Funds Act. And this is a technical amendment which has been requested by SARS to include reference to the Tax Administration Act, so to enable SARS to process the IT88 deduction. And then, Chair, this then takes us to clause 6, which is the amendment in 37 Cap D of the Pension Funds Act, which deals with the deductions that are permitted, and the substitution in particular, therefore introduces the deduction that may be allowed in respect of the savings withdrawal. And I think if I then come to this section, I will then would like to advise the committee of the other substantial amendment, which is also linked to the referencing of the new paragraph D of the definition of pension fund interest of the pension fund organization, where we needed to close the gap and ensure that we then provide that a fund may make the payment, may pay the maintenance to a fund contemplated in paragraph D of the definition of pension fund organization in section 1. So this is a substantial amendment that links to that. And therefore, in this clause, we have outlined all the deductions that are permitted And that then takes us to the next clause. And from here, of the amendments to the various public sector pension funds legislation. And the first one is the Post and Telecommunications Related Matters Act that is being amended. And in this clause 7, we provide for the definitions in the Post and Telecommunications Related Act, which are similar to the definitions that are contained in the Pension Funds Act, and may include the one
Can I
definition.
just ask you to pause here, right? Can I just ask you to pause and for members to be alert to what's going on here?
Yeah.
The magnitude, the gravity, the scope of the amendments you're effecting, covering several other bills as well, in this bill as a whole, borders on stupendous, okay? I don't know how a committee, even at the best of times, even if it was just a term starting of a 5-year span of Parliament, would be able to itself, as a committee, Frank and others, carry out oversight and expect the staff to go through this and check that every clause here, every cross-referencing is correct. So as a chairperson, you feel almost helpless, actually. And I'm just saying that this is, I don't know how Parliament expects us to process these things at the best of times. So worse when we are under the pressures we are. But I'm just alerting the committee to this. I'm not sure what happens. I'm not sure who's coming back and so on. But these are matters that need to be addressed. We are processing this subclause without knowing fully that all that should be covered and even the cross-referencing is all correct. Can I ask Tracy a question? When you presumably made these changes, right, you checked with the relevant department who's much more familiar with some of these bills, that some of these laws that you're amending through this process. They had a say in this and they've checked that everything you've put here, cross-referencing and so on, is correct. Like here we're dealing with an in-house matter, it's tax issues, right, which falls under Chris and yourselves. But if you go further down, there are issues here that go beyond the purview of the bills that fall within, obviously, Treasury, Divorce Act, and so on. So I just want to ask you a question about process. You confer with the officials from the relevant department, and you check that the cross-referencing is correct, and that all the issues that you need to amend in their bills is covered in your bill here. Hello?
Thanks, Chair. Yes, we have undertaken an engagement process with all the relevant departments, which in respect of the Post and Telecommunications Related Amendment Act is the Department of Communications, and also
we know that, but you're saying you did it. That's what we need to know. But,
yes,
but Parliament needs to ask itself. It's a question I'm putting to Parliament, right? Asking you, did you do it? Yes, you say you did it. You're a human. Already we've just seen the glitches, right, in this current version of the bill that's before us based on what happened at SCOF. So, in short, I'm alerting the committee to the difficulties we have as a committee. I'm not sure what we do about it, but hey, that's the next generation of MPs to attend to. Right, go ahead, please.
Thanks, Chair. And therefore,
before we do, can I just raise something before it runs away from me? Sure. So, so just a question, please, if I may. I don't see an amendment to the definition of the term "the authority." Now, I'm assuming that with the FSCA coming in, there was an amendment somewhere before. I just want to make sure that there's a, because we're referencing the authority in the amendments to Section 4. I don't see a new definition for that. Is there an existing definition that we are happy with? Because I can't find it in the original bill, noting that the amendments, I mean, the amendments fill 2 screens, the amendments that affect us. So is it good time to put in a definition of the authority, or is there one already in one of the previous amendments?
Thanks, Dennis. Answer that, please.
Thank you, Chair. Yes, we have made a substitution in the Pension Funds Amendment Act, as I have flagged in front of you under Section 19, where changes have been made to refer to the authority, which is the FSCA. And we therefore have removed the reference to the registrar. So, and everywhere where we are talking about authority, that change has been made in this Act.
Thank you.
Chair.
All right, go ahead, please. Can I just also suggest that when we write our report, we should express our dismay while understanding the urgency of this matter, and we support the need for a two-pot system. We express our considerable concern at the processing of these bills, given the gravity and scope of the bill. Right, fine, go ahead.
Thank you, Chair. And as I have indicated, then in the Post and Telecommunications Related Matters Act, we are amending the Section 1 of the definitions, so to include all the definitions that relate to the components as well as to the pension interest definition. In clause 8, we are inserting in the Post and Telecommunications Act an application clause so to provide for the conflict between the provisions of this Act and the Divorce Act, as we have similarly in the Pension Funds Act. And then in this Act, again, in clause 9, we have substituted the clause dealing with withdrawals and deductions from members' pension benefits. This clause would be a clause that would provide for the deductions that are permissible by the fund, which include but not limited to orders against the fund in respect of maintenance, divorce, and other debts that the fund may provide to, or other loans they provide to the members of the respective funds. And we also therefore had to make this substitution so to include reference to permitting a withdrawal in terms of the savings benefit that is being introduced by the two-pot system. If I may proceed, Chair, we also have substituted Section 10 Cap F of the Post and Telecommunications Related Matters Act, which specifically deals with divorce matters, where we are making sure that the processing of divorce order payments now is across all components, that also when a member is requesting for a withdrawal of the savings benefit, that the orders in respect of the divorce be protected to an extent that these withdrawals are not, the withdrawal is not made and it results in insufficient funds to meet the commitments or rather the financial obligations as a result of the divorce. But also to make sure that the spouse or non-member spouse is informed when the party would like to make the withdrawal, or they can inform the fund. Now, which then takes us to clause 11, which deals with the amendment of the Transnet Pension Funds Act. Similarly, Section 1 of the Transnet Pension Funds Act it has been amended to include the various definitions to align with the two-pot system and the introduction of the various components, as well as the definition of pension interest. There were also some of the definitions that were substituted at the request of the funds under Transnet, which are not that substantial. They are just consequential, as you would see, maybe as an example in paragraph J. We therefore also in this act are including an application clause, which will be a new 1 cap A to provide for in the event of a conflict, which act between the Divorce Act and this act will apply, and it will be the Transnet Pension Funds Act. We also, and I think they also took the opportunity to reference the Financial Sector Conduct Authority as it is. And then in section 7, again, it's a clause 14 that deals with withdrawals and deductions. It takes a similar format as the Post and Telecommunications, where we have made the substitution so to provide for for the withdrawal, savings withdrawal benefit in particular, and make that alignment, and other deductions and which are permissible. So that would be similar to what is contained in 37 cap D of the Pension Funds Act. And that takes us to a new clause, which is clause 15. This clause is being inserted because the Transnet Pension Funds Act was not providing for this payment on pension or dissolution of marriages. So we took the opportunity then to substantially provide for the payment of pension interest on divorce. So to also make sure that all the pension fund, if I may use that word, acts have similar provisions, and therefore that would lead to similar or equal, treatment and application of the law. And then
Can I ask you a question? Sorry, can I come in here? This provision would have been necessary anyway, even if it weren't for this bill. Would that be correct?
Yes. And therefore, they did
But then
have...
it raises a broader issue, which is not really our concern right now, that these acts are outdated, right? In some senses, irrelevant to what we're doing right now. And I don't know, Kosato, whether you shouldn't be raising these issues in another forum. But that's for you to think about, and that falls under other portfolio committees and select committees. But okay, let me stop here. Go ahead, please.
Thanks, Chair. Which takes us to clause 16, which is an amendment of section 9 of the Transnet Pension Funds Act, which deals with the recovery of debts owing to by the fund. And we also have therefore substituted this section so to ensure that it is aligned with the other Pension Fund Act, and it takes a similar approach to 37 cap D of the Pension Funds Act. Again, we Transnet also took the opportunity to insert a new clause, which they did not have, on housing loan schemes, where the financial support is from the designated funds. This is provided for in the other funds, but they did not have it, and they have taken the opportunity to include this. And which takes us to clause 18, which deals with recovery of any other amounts that may be due. So there is a kind of a change of format. If you're looking at the Transnet Pension Funds Act, and maybe you look at Post and Telecommunications, so you will find their act would have had different sections dealing individually with some of these deductions. So we did not change that format, but we made the substitutions so that we can get the alignment. But and therefore they also took the opportunity to insert this subsection, this section, so to deal with matters that they were not providing for. For an example, in respect of subscriptions to medical aid and insurance, and where such would be paid by the fund. Then that takes us to clause 19, which is the amendment of section 13. This is just a consequential amendment to the effect that we are now introducing the new sections that are being inserted, and therefore it was therefore required that in this clause we do refer to those sections. Also, to provide for a deeming provision that the fund is defined in part of this fund, Transnet pension funds, or rather the funds under this act, are paragraph A funds, which makes it easy for the application of the Income Tax Act to these funds. And then that then takes us to clause 21, which introduces the amendments to the Government Employees Pension Law. And by the definition of section 1 of the GEP law, and including the definitions that are similar to the ones in the Pension Funds Act or Amendment Bill. And they are to make sure that we introduce the components and also to introduce the definition of pension interest. We also had to insert the new clause, section 1 cap A, to provide for in the event of a conflict in respect of the divorce matters in the Divorce Act and this Act. Now again, the pension law also provides for withdrawals and deductions from members' pension benefits. Again, we have substituted this section so to align it with the other pension funds, and we also introduced the withdrawal benefit that is coming with the two-pot system. And then which also take us to the substitution of section 24 cap A in clause 24, which also deals exclusively with the matters in respect of the payment of pension interest. And the substitution was to align the section so to take into account the requirements when the members are making the withdrawals in terms of the savings withdrawal. That would then, Chairperson, be the end of the clauses. The last clause will be then the clause that deals with short title and commencement. Thank you, Chair.
Yeah. Okay, thanks, Nomalizo. All I can say is you and your team have done a phenomenal amount of work here. And no one is going to attack you. We don't go through the memorandum that we read on our own, right? No one's going to attack you. Some glitches here. It's just the magnitude of what you've done, you know? The Revenue Laws Amendment Bill seemed like, you know, relatively minor. So we must thank you, Treasury. You've been under a lot of political pressures to get this done. So can we, I'm sure the whole committee agrees with me, express our gratitude to you. Never mind if there's glitches, we'll have to deal with that in the new term of Parliament. Now I see there's something on the chat group. I think this is MP replying to Dennis Ryder. Okay, that's covered. Thank you. That was our case thanking MP, okay? Okay, that said, members, is there anything else you want to raise? No. So in that case, we meet at 2 o'clock. I don't think it'll be more than half an hour. And can we ask the drafters to be a bit tough, really, not soft? We're very unhappy with this process, but we recognize the need for it. And we feel that in Treasury, Parliament should avoid subjecting committees to this process. But, you know, we must express our concern about implementation, the need for implementation program. Relatively consensually agreed there will be differences, obviously, and that sort of thing. Then we should add something about asking the new incoming committee within 3 weeks, let's say within 3 weeks of it being constituted, not 4, to meet at least Treasury, and if they so choose, stakeholders, to say where's the process. Is there anything else people want to add to the report? They must send it to Nkululeko and myself. Anything else, colleagues? Nope. So I want to take the opportunity of thanking all of you, not least the stakeholders who have appeared from civil society and Treasury, and the colleagues from the committee and comrades. Usually, this meeting was supposed to start at 10 and finish at 1. And because of the practical issues, I'm speaking at that funeral, I have to be there. You know, we brought it forward. But once again, thanks to everybody. I appreciate the cooperation from committee members as usual. Thank you. We shall see you tomorrow at 10 o'clock. The meetings have gone back to 10 simply because there's no bus issue anymore, since the meetings are all Zoom this week, and in fact, they aren't plenaries. And wherever we'll read through the program, but it changes beyond our control, very frustrating in Nkululeko and me. But if there are no plenaries, then we will use the afternoons to process the public procurement bill. Thank you. And the report was sent to you yesterday. Please look at it beforehand. Thank you.
Honorable Chair.
Yes, sir.
Sorry,
Funny.
Chair. Lastly, when we look at the dates, can we please just keep in mind the GLAB meetings that's also taking place? And just keep that in mind, not to have a double booking, Chair.
Yeah. What are you referring to exactly? I'm a bit confused. GLAB? What's
The
that?
intelligence law meetings that's also taking place, Chair.
Oh, yeah.
Just keep that in mind, please.
Yeah. You know what? Usually, you know, we can't do that. It means taking account of 26 or 34 other committees. We don't normally do that. But bearing in mind where we are in the parliamentary process, in Nkululeko, will you confer with the secretary? Because Dennis will say, especially smaller parties, I understand, Dennis will say, well, take into account these. So you meet in the afternoons, Fani?
Chair, those meetings are up and down. It's the ad hoc committee, so we're pressing to get it through. I just want us just to take note of it. I will send
we'll do our best.
we'll try
the
schedule to
obviously.
Nkululeko.
No, obviously. But I'm saying that where there are no plenaries, I'm not sure how many committees are going to be meeting, so we're using that slot. But we're not going to impose on you. So in Nkululeko, and what you could also do is send in Nkululeko your program for the next period until Parliament rises, okay? So we'll accommodate you. Thank you very much. And it's easy because it's Zoom, and so we can juggle things around. Thanks. But I must say, I spoke to Treasury twice, and they have, in fact, sat for 2 days, if I'm correct, 8th and 9th, with all the stakeholders in the public procurement bill. So we've had an exhaustive exchange with them. They'll be here tomorrow in Nkululeko. We will ensure that they're all invited, I'm sure. Even those who made submissions at the public hearings on the NCOP side, who did not attend the 8th and 9th, they're welcome to come tomorrow. And then at the end of that process tomorrow, we cut off and start looking at the policy issues and then clause by clause. Thank you very much, everybody.